Good morning and welcome to the Killik & Co market updates. We're coming to the end of the third quarter reporting season now, and so far company results have generally been better than expected, and until yesterday the S&P 500 had risen every day for 8 consecutive days. 79% of companies in the S&P 500 index have reported their quarterly results so far, and of these, 74% have beaten expectations in terms of earnings. Here's a 12-month chart for the S&P 500, and you can see that rise over the last couple of weeks as earnings season has progressed. In light of this positive earnings season, we thought it might be interesting to look at some measures of investor sentiment to see how market participants are feeling at the moment. There are many different ways of gauging this. One is the VIX index, also known as the Fear Index, which we've looked at many times before in these videos. The VIX measures expected future volatility of the S&P 500 index. Here's the 5-year chart. And you can see that massive spike during the early days of the pandemic, but during the last couple of weeks, the index has dropped to below 15, which implies that the expected level of future volatility is low. Another sentiment measure is the CNN Fear and Greed Index, which is published every day on the CNN website. This looks at 7 different market indicators, one of which is the VIX, another is the percentage of stocks rising versus the percentage of stocks falling, and another is the demand for safe haven assets. All of this data is fed into the CNN system, and it comes out with a score between 0 and 100. 0 would suggest that investors are feeling very fearful, whereas 100 would suggest extreme confidence and greed. The gauge is currently at 41, just below that neutral level and suggesting a mild amount of fear. However, what's interesting is to look at that score over time. Here it is over the last year, and you can see it has been increasing sharply, suggesting that confidence is on the rise. Although the level of volatility for the overall market is not at a high level, we are seeing some unusually big moves in the share prices of individual companies. One recent example is payments company Adyen, which dropped heavily in August when it disappointed the market but gained over 30% yesterday after posting a better-than-expected trading update. An example from this morning is drinks company Diageo, which dropped over 12% after posting some disappointing results for its Latin American division. This is a big move for a £62 billion international business, and it suggests that investors are not in a very forgiving mood. Moves like this are a reason why it's a good idea to spread money across a wide range of individual shares rather than having all of your eggs in one basket. The Chancellor's autumn statement is due on the 22nd of November, so we're waiting to hear what measures will be announced to balance the UK's books. Here we've got HMRC's tax receipts over the last 20 years. Broadly, they've been trending upwards, but you can see the dip in the lockdown year when so many people were unable to work. One thing that will make a big difference to the government's tax receipts this year is the amount of interest being received on cash savings. For much of the last decade, interest rates have been very low, and most people have received very little interest on their cash savings. However, that has changed over the last year, and now many people will end up having to pay tax on that cash interest. Last week, we showed this chart of the UK and US base rates over the last 20 years, and you can see that sharp rise since 2021. The interest being paid on cash accounts has followed a similar trajectory, as you can see here. The purple and green lines show the rates available on 1- and 2-year fixed-rate savings accounts, and the pink shows the rate available on instant access accounts, which tends to be much lower. For the 2023-2024 tax year, it's thought that 2.7 million people will need to pay tax on their cash interest. That's 1 million more people than last year. It's thought that 1 in 20 basic rate taxpayers and 1 in 6 higher rate taxpayers are expected to fall into this bracket. This is good news for the government because they will be receiving more tax receipts, but it will be difficult for HMRC, who will now have to deal with a lot more self-assessment tax returns. Moving on to have a look at next week, we've still got a few companies scheduled to report. We are waiting for results from Experian, SSE and TJX. That's it from us. Have a great weekend, and we'll see you next Friday.